What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is we're going to be taking a look at that Ortex short interest and utilization data, and specifically the amount of shares that went out on loan today for AMC and GameStop. It was a very significant amount, and obviously they used these shares to try and fight to keep the price of these two stocks down as the overall market was rebounding after the morning session when a lot of things were starting to trend to the downside. Now, in addition to this, we also have to talk about this concept of the potential for a gamma squeeze coming up for that big January monthly options expiration date. I know a lot of people have been asking me this question, so I decided to kind of go over my thoughts on exactly what is going on with some illustrations and showing you guys is exactly what's going on with the option chain. Is it still possible? Is it canceled? And are we going to have to wait for some other catalyst to come up to see that big price movement to the upside? Now, we also have some very interesting indications from Citadel and Sequoia that Citadel, the market maker, or Citadel's full umbrella of companies, are looking to go public in the future. Not really right now, but in the future, they are looking to go public. The last thing that we're going to talk about is this situation with Robinhood and how a 27-year-old truck driver ended up getting back about $27,000 for the actions that Robinhood took last January when removing the buy button. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot for getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So again, we are playing the game of what did AMC's share price close at today? Now, if you guys were on the stream today at close, it did look like it closed flat. Webull is now updating it as closing up a penny. Again, not really a big difference at all, but we should be able to see what the exact closing price is at the close of the bell. Now, coming over to the Ortex updates for AMC, let's give this a quick little refresh over here. They borrowed 2.93 million shares against AMC today. The really important thing that I want to point out to everybody is this right here. Now, I was kind of trying to let everybody know because in my opinion, the exchange reported short interest numbers that came out today, I was honestly expecting them to be much, much lower than what they're seeing right now. We just saw today the exchange reported short interest numbers come in at 18.46%. The previous amount, 18.84%. The reason why I was expecting these types of numbers to kind of start to step down was because of the fact that we saw that run from the low 20s up to the $32 mark and then back down to 28 in the time frame that this exchange report interest period is covering. Now, when we look at the estimated short interest that Ortex is giving us, let's see right here on December 31st, what was the number that we are seeing? So when we come back over here, it's actually not giving it to us right here, but it was much lower than what we're seeing on this number right here on the exchange reported short interest. So Ortex underestimated the short interest this time. So we should expect to see the short interest step up. We should start to see the utilization step up, potentially the cost to borrow step up as well, but the shares on loan should increase as well. Now, getting into this situation with the gamma squeeze. So nothing is ever going to be guaranteed. We know that some weeks and some monthly options expiration periods are going to lead to a higher potential for a big price run-up due to the option chain kind of freaking out, and that is what we are seeing for this January expiration date. So we have 102,000 calls in the money right now, and we have 569,000 call contracts out of the money. A lot of these are concentrated at the $145 strike. So in order to see it really, all these out of the money contracts really affect the price action, we're going to need to see a big rip. Now, we are seeing 88,000 puts in the money and 290,000 puts out of the money. So if you guys have been following along with some of the theories that I've been trying to really let everybody know about in terms of the delta hedging and how I don't believe that the market makers are hedging these contracts right now, it doesn't make a whole lot of sense that they would be just because of the balance that they are kind of seeing on these strikes right here. And when we take a look at where some of these contracts are concentrated, going back over to AMC's options chain right here, we do have a decent gamma rep, and this is the weekly expiration date for this week. We have 7,000 contracts at 23, 24, there's a decent amount, 25, 26, 27. There's a lot of contracts that are pretty close to the money, which is why they are trying to hold the price down of this stock going into the end of this week. Now, again, when we come over to this January date as well, we are going to really need to see a big rip above 26 to really see any of these options really have an effect, mainly because of these puts that are also in the money. But here's what I want to really get across to everybody. As each day goes by, we are looking at something like this right here. And I want you guys to view this as the price being up here at the peak of these two charts right here. And this is kind of the momentum slide that we would end up seeing for AMC. So when we're looking at what's going on here and we think about the max pain and how they're not necessarily delta hedging, as people are going to start speculating more and buying closer to the money contracts as AMC's share price starts to go down, if we are going to see any type of price movement to the upside, well, it's going to be a lot harder for these market makers to keep it in control. And the range that they are going to have to keep it in is going to be a lot tighter. So right now we're seeing something like this, but as every day goes by, we are going to move towards something like this right here, where if the price starts to go to the upside, it's going to be a very, very aggressive price movement to the upside. Now, moving on to this Citadel and Robinhood situation, Citadel did something very, very, very strange today. So Ken Griffin's trading powerhouse gains new partner. Citadel Securities is taking its first outside investment from the Silicon Valley firms Sequoia and Paradigm. These are venture capital firms that their main goal is to invest in companies pre-IPO and end up reaching some sort of liquidity event, mainly in the form of an IPO. Now, we can see that this article was written by Andrew Ross Sorkin, among other individuals, and we've seen this individual on CNBC really come out against the apes multiple times, so you do have to take what is said in this article with a grain of salt. But here is really what Citadel is looking to do right here. Since Sequoia is really looking to take companies public, it doesn't make a whole lot of sense that they would be investing in Citadel right now. Is there a lot of room to grow? There might be a decent amount of room to grow for Citadel. They've been growing pretty fast over the last 10, 20 years, and it does cite in this article that they do want to get into the crypto space. But at the same time, when you think about what happened with Robinhood in their IPO, it really does not make a whole lot of sense. Did they not learn any lessons? Hood's IPO skyrocketed. And then what happened? Robinhood came crashing down. And the retail investor community honestly is more outspoken and hates Citadel a lot more than they hate Robinhood. In my opinion, this is a very dangerous move for anybody who holds any type of equity in any type of business that Citadel is operating in, because that stake that they have in the company, if we are going to see any type of price movements like we saw with Robinhood after they IPO'd, Citadel's employees are going to be losing a significant amount of money. Now, the other thing that I want to talk about here is how Robinhood is starting to run into some trouble after the actions that they committed back in January. Remember, in yesterday's video, we started to talk about how Robinhood was filing a motion to dismiss for the lawsuit against them in Florida, basically citing that since they disclosed that they were going to commit a fraudulent act, that then that act was no longer fraudulent, which makes absolutely no sense. But here's what we were looking at in this article. A 27-year-old truck driver just became Robinhood's first big headache of 2022. Is this a simple FINRA arbitration award or a $30,000 brick through the wall of Robinhood's legal Citadel? I kind of like how they phrase that and they throw Citadel in there. But essentially what this is showing us is that we've kind of set a precedent that Robinhood is liable for damages. Here's kind of where this gets us going forward. If we end up getting into a situation where not only going forward with basically kind of seeing where all of these lawsuits kind of play out against Robinhood from the actions that happened in last January, if we end up seeing a wild price movement to the upside in AMC, GameStop, or any of these other stocks, that is going to really restrict Robinhood in terms of putting a lot of pressure on them in terms of the liquidity requirements, they are going to be a lot less likely to turn off the buy button because they know that they are going to be legally liable, not only for damages, but also think about this. They are a publicly traded company now. If they were to turn off the buy button again, their stock price is going to crash. Their employees are going to be losing a lot of money. The executives are going to be losing a lot of money. So this is a really, really strong step in the right direction. Hopefully we see a lot more of these judgments come out against Robinhood, and they are going to be paying out some of their customers some more money, but we're just going to have to wait and see. Hopefully we are going to be seeing more of these come out in the future. So that is mainly going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.